Welcome to the Deep Dive. Today, we're looking at something pretty significant happening over in India.
Yeah, a major event in their logistics sector.
Specifically, we're digging into Peak XE Partners, the venture capital firm. They've just exited their investment in a company called Porter.
That's the plan. We want to unpack how this happened, what it means for Porter, for PeakXE, and maybe, the bigger picture for investing there.
Okay, so our main source here is a report from Mint, but we've also pulled in some useful numbers from places like NTrack and The Credible.
Right. And for you listening, the mission today is pretty straightforward. Get the key facts on this exit, understand why it's making waves, and maybe pull out some insights about startup investing, especially in logistics.
Sounds good. Where do we kick off? The big number.
Let's start right there. The outcome for peak XV.
Okay, so the headline number is huge. Porter, the logistics company, generated returns of over 1,200 crore rupees for Peak XV.
1,200 crore, that's substantial. And because of that, PeakXV has now fully exited. They're out.
Completely out. And what's really turning heads is how that compares to what they put in initially.
Yeah, the multiplier.
Exactly. The reports are saying this exit gave them an 11x return. 11 times their money.
11 times. On an initial investment, I think the figure was around Rs 116 crore.
That's the number. Yeah, Rs 116 crore. Put in over time, of course.
Right, not all at once. It was spread across different funding rounds over, nearly a decade?
That's right. They first got involved way back in 2015. That was Porter's Series A round.
Ah, Series A. So fairly early days for Porter back then.
Yeah, Series A is often that first big institutional chunk of money after the very early seed stage. So Peak XV was in for the long haul.
Which, makes sense given the return. You don't get 11x overnight. That really speaks to Porter's journey, too.
Definitely. You need serious growth for that kind of exit.
So Porter's story, what's been happening there recently?
Well, quite a bit. They just closed a big funding round themselves, Series F.
Series F, so pretty late stage. How much was that?
A hefty $200 million. And crucially, that round involved what they call secondary share sales.
Ah, okay. So that's where existing investors, like PeakXV presumably, get a chance to sell their shares to new or other existing investors.
Exactly. That's likely the mechanism that allowed Peak XV to make this complete exit.
And this comes alongside another major milestone for Porter, right? The U word.
Yes. Unicorn status. They crossed the billion-dollar valuation threshold earlier this year.
Making them the third Indian startup to hit that mark in 2025.
That's what the reports say, yeah. After Netradyne and Juspay, hitting that kind of valuation, it definitely creates liquidity options, makes big exits like this more feasible.
For sure. But valuation is one thing. What about the actual business performance? How are Porter's financials looking?
Pretty strong, actually. They seem to be backing up the valuation. For the last fiscal year, the one ending March 2024, their revenue from operations jumped significantly.
How much of a jump?
Almost 56%. Up to Irzi's 2,733.8 crore. That's serious top-line growth.
Wow, okay. Over 50% growth at that scale is impressive. And are they managing profitability? Or, losses? Logistics can be tough on the bottom line.
That's the other interesting part. They actually managed to cut their losses quite substantially.
Really? By how much?
By 45%. In fiscal 24, their loss was down to about Rs 95.7 crore.
Okay, down from
Rs 174.6 crore the year before. So, yeah, they're still losing money, but the trend is definitely moving towards efficiency and sustainability, even while growing fast.
That combination, strong revenue growth and shrinking losses, is exactly what investors like to see, especially pre-exit.
Absolutely. And the forecasts look good, too.
What are they projecting?
Well, according to data from the ARC, they're projecting overall scale, which probably includes revenue and maybe other metrics, to grow another 55% this current fiscal year.
Another 55%? Wow.
Yeah, potentially hitting around Rs 4,300 crore. You can see why, with that kind of momentum, it was probably a good time for Peak XE to cash in those chips.
Makes perfect sense. So that's Porter's side growth, unicorn status, improving financials. What about Peak XV's view on all this? What are they saying?
Well, as you'd expect, they seem very pleased. Their spokesperson called Porter a fantastic company.
High praise.
And also a clear category leader in local logistics. They really emphasized how much Porter has grown since that first investment back in 2015.
From a Series A startup to a billion-dollar company, that's quite the ride.
It really is. They also made sure to thank the founders Uttam Digga, Pranav Goel, and Vikas Chowdhury, called them wonderful partners.
Nice touch. Standard practice maybe, but still important.
Yeah. Though, interestingly, neither Peak XV nor Porter actually disclosed the specific financial nuts and bolts of the exit deal itself.
That's pretty common in these private deals, isn't it? They often keep the exact terms under wraps.
It is, but we do have some idea of what Peak XV's stake looked like before this happened, thanks to the credible.
Ah, okay. What did their data show?
Before this latest Series F round and the exit, Peak XV apparently held about 13.77% of Quarter.
13, nearly 14%. Okay, so that gives a sense of the slice of the pie they just cashed out for that RS 1200 crore plus return.
Exactly. Gives you some context for the valuation discussions, too.
And who else were the big players on the cap table, according to that data?
The largest external shareholder was actually Mahindra and Mahindra Limited.
Oh, interesting. The big industrial group.
Yeah. And after them, Light Rock Growth Fund was another significant stakeholder. Presumably, they're still invested.
Okay, so Peak XV is out, Mahindra and Lightrock likely still in, along with newer Series F investors. Let's broaden the lens a bit. What are the wider implications here?
Well, number one, it's just a big win for the Indian venture capital scene. Simple as that.
An 11x return over 10 years. That's a poster child for successful VC investing in India.
Absolutely. It validates the potential in the market, especially in a sector like logistics, which is, so fundamental to the economy.
And it definitely burnishes Peak XV's reputation, shows they can pick winners and nurture them over the long term.
Right. And it's not like this is their only success story, is it?
No, the reports mention they've had other successful exits, partial or full, from companies like Rebel Foods,
Healthcart, Finova.
K-12, Techno, Cloud9 Hospitals. So there's a pattern of successful investments across different sectors.
Suggests a certain, expertise in navigating that market.
And successes like this, especially big, profitable exits, they tend to attract more capital, don't they?
For sure. It signals to other investors, both domestic and international, that there are significant returns to be made in Indian startups that can only be good for the ecosystem.
Definitely fuels the cycle. Okay, so maybe let's try and wrap up the key points for everyone listening.
Sounds good. So the main event, Peak XV Partners has fully exited its investment in the logistics company Porter.
And it was a highly profitable exit, generating over RS 1200 core, which represents about an 11 times return on their initial investment made over the last decade or so.
Meanwhile, Porter itself has been on a tear. It's achieved unicorn status, so valued over $1 billion.
Right, and it's showing really strong growth, nearly 56% revenue increase last year, while also significantly cutting its losses by 45%.
Yeah.
Looks like it's scaling effectively.
And this whole story, it's more than just about these two companies. It really highlights the dynamism of India's startup ecosystem.
Yeah, and the logistics sector specifically. Plus, it underscores Peak XV's track record as a major successful player in that market.
Okay, so before we finish, let's leave you with something to chew on.
A final thought.
Exactly. When you look at this, an 11-fold return built over 10 years in a market like India, what do you think are the really critical ingredients for that kind of long-term success? What makes these emerging market venture bets pay off so handsomely?
Good question. And maybe the flip side. Porter is now a well-funded unicorn. Peak XV is out. What does the road ahead look like for them? How do they keep winning in that really competitive logistics space?
Something to think about. Thanks for joining us for this deep dive.